Good evening, everyone. Welcome to this evening, or good morning, actually. Or it could be good afternoon from wherever you're watching us. And welcome to Africa Women in Trade webinar, known also as AfWITrade. It's a pleasure to have each and every one of you joining us. Welcome. And today you can actually get us on Facebook, you can get us on LinkedIn, and you can also get us on YouTube. So tag somebody, let somebody know we are on. Welcome, come to join us. Today we are having a really, really great topic with really great people. We are looking forward to having a lovely evening. We're looking forward to having fun. And you're all very, very, very welcome. So I'm your host today. My name is MILKAH, and I'm the Director of Africa Women in Trade. I deal on the business to business side, and I'm excited today because we are here to learn together, to grow together, and also to build each other. So, welcome on board. Don't forget to let somebody know that we are watching on YouTube, LinkedIn, and on Facebook. So, my name again is MILKAH, and today we are here to have a webinar. And our topic today is an amazing topic. It's about investors' trust and how to raise capital, and also how to lead with confidence. So I would like to welcome you one more time. I'm just going to give you a little bit about Africa Women in Trade. Who are we? We start with what we believe in, Ubuntu, which is I am because we are, which means every single one of us has something to say. So Africa Women in AfWITrade actually is a group of women who have come together, and we are actually a social enterprise. And we were founded with the aim of helping women and youth SMEs to help them trade to grow, especially in Africa under the AfCFTA. So we have a vision, and our vision is actually to create a platform where people can come, where people can network, where people can grow and be an enabler. So that is our vision, to enable women to grow and trade and to be able to compete on the global market. Our mission is that we are able to bring people together by networking Africa women, providing different things, access to markets, and also growth and development. So we as Africa women in trade, we stand on four pillars. Why do we stand on four pillars? If you're building a house, you must have a foundation, and then you must have the support system so that you can be able to build and grow. So our four pillars is, one is access to information. Information is what makes you be able to make decisions. So we give you information as it comes live, fresh. We also have capacity building, which is one of the big pillars that we have. Finance and investment and market access. So today, as AfWITrade webinar, we are going to be focusing on finance and investment, and on capacity building. So if you're there today, get all your questions, take your pen and paper, make sure you're listening, make sure you're ready to learn, because today you're in for a treat. There's so much to learn today, and we are so honored to have one of our members come and be part of the capacity builders. Now, a little bit more about Africa Women in Trade. How do you join Africa Women in Trade? All you need to do is, it's simple. You're a woman or you're a youth. And how do you get in touch with us? We have our website, which is africawomenintrade.com. That is where you get us online. We have we have our website. You can get all the information and a little bit of what I've said. There's much more that we do. We have it's a place where you can network with other people, and the best thing is for you to become a member. There are so many benefits of becoming a member. One, you get to interact with other business people who are like-minded. You get access to markets. You get access to finance. You network, and you're constantly being updated. We do have a membership fee, of which we will let you know. It's on our website, and you're welcome to join us. Come and join us, be part of this great team, and come, and together we shall achieve so much. So Africa Women in Trade is a beautiful space to be. Make sure when you go to our website, look on the menu. There is a place where you can say join us, and you'll be able to get information. We'll also be putting our email for you. If you want to get in touch with us on email, we have our email address. It will be coming up on the screen for you, and you will be able to get in touch. So I encourage each and every one of you, if you're not a member, make sure you register before this webinar ends. This is just a taster of how much we have, how much wealth we have in our organization, and we'd like you to be part of it. So you can write to us at africawomenintrade@gmail.com, and we'll be able to get back to you. So today we are excited to introduce to you our team, who are going to really give you the information we're looking for. Again, I remind you of the topic today, and our topic today is winning investors' trust. Wow, you business people out there, when you want your business to grow, you need to have trust with the investors so that they can invest in you. So this is what we're talking about today, and also how to raise the capital. Yes, you just don't come to the investor and you don't know what you're doing. You need to know what you're doing. And so we are really happy that we have Alice Santos. Welcome, Alice. And
Hi.
Alice, yes, it's from APGB. I've said it right, Boutique Consultancy. She's the lead, and she's here with her team. So welcome on board, Alice. Good evening.
Good evening, as you said, good evening, good morning, good afternoon, whoever or wherever in the world you are watching us. Thank you so much, MILKAH, for the warm welcome. Yeah, thank you, Joy, and the team for hosting us this evening. So thank you so much.
Welcome, welcome, welcome. Thank you very much. So Alice, I think I will not take too much time. So those of you who are watching, I hope you have your pens and your notebooks, your iPads, wherever you are tech savvy, go for it. And join us today as Alice and her team take us deep into the webinar. Welcome, Alice.
Thank you so much. Thank you once again. I'm very excited to be here and delighted for this opportunity. First of all, I want to say that it's amazing to be a member at African Women in Trade, not just for the community, but also for interacting with other businesses and get to know businesses that otherwise we will not have access to, because everyone is doing their own thing and it's hard to do it on your own. But, you know, when you're too involved with it, that's your world. So it's good to be part of African Women in Trade, to have access, and also to be here at this platform to share with you our funding program, which is something that we will talk about today. And I'm going to wait for Bridget to share our screen, our presentation. And yeah, so our team today, as MILKAH said, is winning investor trust and how to raise capital and lead with confidence. Now, I would like us to start by focusing on three words. The word trust, and as MILKAH said, if you have your pen and paper, just write that down, highlight that. The word trust, the word lead, and confidence. So starting with the word trust, I know from experience that building a business, it's a journey. As I said, sometimes you get involved in it. It can be incredibly tough when you're doing everything on your own, basically. You know, you put the hours, you put the effort, you sacrifice sometimes your priorities to make things happening, and eventually you start seeing the results, and you realize that just how much potential your business truly has. But here's the thing. With the right support, you could go even further. And sometimes all it takes is someone who believes in your vision, someone that can see what you see and helps you bring all of that business and idea to life. And that's exactly what we are here to talk about, to share with you today. How can you position your business in a way that clearly communicate your vision and builds the kind of trust that investors are looking for? So now the word lead. I'm a fan of this author, John C. Maxwell, that he explained that leadership is influence, nothing more, nothing less. And I agree with him. And really, that's what it comes down to. You start, first of all, by influencing yourself. You choose to do good. You choose to do a business. You show up for your own business. You are committed to your success. And from there, it's about inspiring others. And consequently, once you inspire, then people start joining you on your journey. Now, I understand that some of you here today and the ones that will see this recording after, you're already leading your teams. You are doing a fantastic job. You are managing people. You are making decisions. You are part of groups like African Women in Trade. And, you're moving things forward. But leadership is also about growth. And as MILKAH said, that learning is part of that journey of growing your business and also yourself. So I invite you to reflect on you and continue to grow as a leader. And throughout the presentation, we'll share with you some practical tools and ideas to help you with that. Now, if you are a solopreneur or you are just starting your business, your idea, my message to you is this: start by becoming a stronger influence on yourself. It all starts with yourself. Developing that mindset, that energy, the presence, and it all matters. Because when you lead yourself and you introduce yourself with that level of positive energy, and you know that you want to do something, you believe in your vision, and you know that you want to bring something to life, you naturally become more attractive to others as well. And when I say others, I say partners, clients, and as well investors. So we'll be diving into all of that during the presentation. And last but not least, confidence. And for all of us to feel confident when we approach someone, especially when you are hoping to influence that person positively, it really starts with understanding yourself. So putting the hours in to understand your reality and where you stand with yourself, first of all, and your business as well. And what do you want for your business? Do you want to scale? Do you want to improve what you already have? What do you want? So understanding that at this stage of yourself, or your business, what do you want? So having that knowledge and awareness is really important for you to be able to communicate that. And confidence comes from clarity about knowing about yourself, and clarity comes with knowledge. So is you absorbing all of that information about yourself and also about your business. So our hope today is that you walk away with something useful, something that gives you a bit more confidence in your next steps. So feel free to take your notes, to ask your questions. You have the chat box. You can leave your questions there. And no question is too small. We either answer your questions at the end when we get to the Q&A part of it, or we will answer your questions afterwards. But all the questions will be answered, so feel free to do that. So today you will meet APGB Boutique Consultancy team. You'll meet Bridget Bachman, our business analyst consultant. You will meet Lilia Dorozovitz, our strategic financial advisor, and Alina Miskur, our legal advisor on international operations, and also myself. I am Alice Santos. I am the founder and CEO of APGB Boutique Consultancy. We are specialists in facilitating funding connections between the UK and African markets. Together, we deliver a discreet, high-quality funding solutions for your business and also for our investors. We work with a handpicked group of professionals, known from their outstanding quality and knowledge, that they bring a deep local knowledge and also a strong, discreet and sustainable partnership, meaning that it's not a transaction relationship, is businesses that want to have that community, that they want to grow. As we grow, they grow together, and we all grow and learn and improve our businesses. Our vision is very simple. We want to close the gap between investors and African SMEs. We do this by offering access to funding, and we will talk about this funding program that we put together, and we are very excited to share that with you, helping with strategic market entry and providing cultural insights. Above all, we are here to support partnership that leads to a long-term growth and open door to a global trade. I think now is Bridget next, so I'll pass the word to Bridget.
Thank you, Alice. Just bear with me. I will slide us to the right slide. So again, good morning, afternoon, evening, everyone, wherever you may be. I'm Bridget Bachman, as Alice mentioned. I'm the business analyst consultant for APGB, and I am very excited to be here. So Alice has beautifully outlined what our clients want. I would like to deep dive into some of their challenges, and over the next few minutes I'll walk you through our framework that transforms these challenges into opportunities. Let's start with the hard truth about what we're solving. If I refer to our slides, I'm not sure if that's coming through yet. Great, thank you. After analyzing countless businesses, we've identified three critical barriers that consistently derail even the most promising ventures. First, the lack of investor readiness. Most SMEs, small, medium-sized enterprises, fail to secure investment, not due to the lack of potential, but because they lack the investment readiness, proper documentation, and strategic clarity that investors require. We've seen businesses spend months preparing presentations that miss the mark entirely because they didn't understand the investors' expectation. Secondly, limited access to institutional funding. One of the most pressing challenges we address is the significant barrier African businesses face in accessing institutional capital, where networking gaps and visibility issues create a fundamental disconnect between promising companies and investors. Now, these structural barriers prevent businesses from scaling effectively despite their growth potential, which is exactly why our consultancy focuses on bridging these critical gaps in the funding ecosystem. And third, to my far right, this is where we see the most expensive mistakes, unfamiliarity with compliance and risk frameworks, which Elena and Lilia will touch on later. These aren't theoretical problems. These are real barriers that have cost real businesses real money and real opportunities. And I wanted to emphasize on the word real, because this is what we're witnessing with our clients. So what does our analysis tell us? That investor expectations vary significantly, that network gaps cost millions in missed opportunities, not just for investors, but also for our clients. And compliance mistakes can be business ending. But here's what success can look like. So let's try and get into that. If you allow me to show you what's possible when you partner with APGB, these aren't aspirational goals. These are the concrete outcomes of our clients and some of the clients that we have. These are concrete outcomes that they've achieved. First, you successfully raise funding, not just any funding, but the right funding from investors who understand your market and can support your long-term vision. Second, you can expand with confidence. You can navigate regulatory environments, understand partnership requirements, and leverage strategic positioning with business insights. If I could kindly have the slide back. Thank you. And third, you build unshakable investor and partner confidence through consistent transparency, and that's quite important. Reliable performance and clear communication about your strategy and your growth plans. Now, success requires articulating a compelling narrative that aligns with investors' interest while consistently delivering on promises. And I know Alice has touched on that already. Investors and partners see you as a serious player and not just a hopeful or a potential. And then fourth, last on this slide, you gain crystal clear clarity in your execution. No more guessing, no more expensive trial and error. You have actionable roadmaps with clear timelines and success metrics. So how exactly do we make this happen? I hear you ask. Let me show you our proven methodology, which Alice touched on. This is our signature 10-step funding program. It works because it addresses the real challenges we just discussed. Let's walk through these. So we start off with the initial client consultation. This is the very first step, which isn't just a meeting. It's to understand your vision and your needs. Next in the program is the business analysis stage. This is where we thoroughly examine things like your business model, your market positioning, your competitive landscape, who your competitors are, to pinpoint your exact funding needs. Now, third in our stage is the final assessment stage, the financial assessment stage. This is where Lilia's expertise becomes crucial, ensuring that your financials tell the right story to our investors. And then next to that, we have the legal compliance check. This is where Alina, and she will touch on that further, reviews your legal structure, your compliance status, and potential risks to ensure you're fully prepared for due diligence and any regulatory requirements. We then move on to the fifth stage, which is the funding strategy development. And this is where our expertise shines. We don't simply assist you in raising money. We ensure you attract the right funds from the right sources. And I can't say that enough. Next, in the sixth stage, once the strategy is set, we create very high impact documents like pitch decks, proposals, executive summaries that powerfully communicates your story and funding requirements. And this is one of the points I touched earlier on regarding investor requirements. We collaborate with you, stage 7, to review funding options. We incorporate your inputs. We don't do this in a silo. We co-create with you. Your inputs are important to ensure that the final approach aligns with your preferences and your strategic goals. Now, next to that, the 8th stage, this is the funding process facilitation. This is where we support you through applications and investor presentations. We help you pitch confidently to maximize your chances of securing funding. Now, when you're approved, and we work hard with you to make sure you are, we help you review and finalize funding contracts. Again, this is the point in the process where Alina as well as Lilia will work with you, ensuring that clear terms that support your growth objectives. And the very last step in this program, the post-funding support, this is what sets us apart from other consultancies, I think. We don't disappear after you secure funding. We remain available to you, and we can continue to help you implement successfully. And why does this program work? I hear you ask. This is because every single step is designed specifically for African markets that we operate in. It works because it's built on real experiences, not theoretical frameworks. This very process, this exact process that we just walked through, if I go back very quickly, this exact process has facilitated over 100 million in funding. So this methodology is only one segment of our very comprehensive approach. Now, I'm going to hand over to Lilia, but later I'll return to explain why APGB is uniquely suited to be your partner in your business or transition journey. Now, I'll hand over to Lilia, our strategic financial advisor. She will take you much deeper into the investment landscape. The problems we identified have solutions. The outcomes I've described earlier are achievable, and Lilia will show you exactly how to navigate the financial aspects of making it happen. Lilia.
Thank you, Bridget. So my name is Lilia Dorozovets, and I have been working in financial institutions for many years. So my main purpose today will be to make all those listening aware of how the investors generally look at capital offering to potential seekers of the capital, and to make you understand a little bit better the other side, because as Alice was referring earlier, understanding of yourself and the other side will help you to make a deal that is most beneficial to yourself, and also you will find in the people who give you finance potentially one of the best business partners. And that's what also Bridget was referring to it as right financing, because obviously people giving you money, they will potentially become your business partners, and depending on how you present your business, thus will be the cost of the money, because obviously they will expect some things in return. So if we go to the first slide, there are among financiers two ways of referring to money provision. One is raising money through equity, and another one is raising money through debt. Those are just fancy terms for first case. You actually are selling part of your company for however much money the other party is willing to buy it for. So this is called equity financing. And the beauty of it is you will not need to repay this money, because you've sold something to the investor, and eventually it might help you a lot with cash flow. But obviously you lose part of the ownership. Then you will be also losing out, obviously, on all the growth on that share of your company. And such investors will definitely want to protect their interests. So they will want to have a say in your business decisions. They will want to be able to control certain decisions, and they will expect a significant return on their investment, because obviously they are risking alongside with you their money in your business. For this kind of capital, it's very advisable to seek the investors who understand your business well and who potentially can help you also with business mentoring, support you with advice, support you with connections, etc. On the other hand, you have debt financing. Debt financing, all of us know, it's just the way of borrowing money, just like, you are borrowing money to buy a house, for instance. So this is your normal borrowing money. It's just you are borrowing it for the purpose of funding your business. The shortcoming of this way of financing is obviously that whoever gives you the debt, they will expect at least interest payments, or also interest payments plus the repayment of the capital over the duration of the loan, or they will expect repayment of the capital in full at the end of the loan. They also will want security that their loan will be repaid. So they will ask potentially for you to mortgage some of your assets, or provide some of the personal guarantees, or to mortgage some of the assets of the business. Generally, equity is more helpful and works better for the high growth ventures, where the future returns are not certain yet. However, they would be expected by the investors to be large. That works best when you have already established your cash flows, and you can prove to your investor that you will be able to pay interest and eventually repay the loan. They also work well for asset acquisitions, where part of the funding for those assets can be supported by the debt financing. There's also another huge difference between those two types of financing is the cost of the financing. Obviously, debt will be way cheaper because the lenders will have way more collateral, or will ask you for way more security, and will be prepared to take way less risks than equity investors. And obviously, which of the financing you will choose will depend on the stage at which your company is in its development, which takes us to the next slide. Please. So there are different stages of business development, and thus obviously different potential stages of capital raising. Also, to manage expectations, the best of the companies, they usually don't just once raise financing and are done with it. They raise financing all along their growth, and even extremely mature companies, of which you hear in newspapers constantly, they, if there are some opportunities for them in the market, they are also raising funds to, purchase another company, or to spread into alternative markets. They raise the funds on public markets. So like this is constant process, and this is something that, like, if you are ambitious to grow, you'd better really understand in all of its complexity and different stages. Very early on, when you are just starting, this is called also a fancy term for it. It's called pre-seed or seed stage. This is the stage when you have a fantastic idea, no one else has thought of it. You found a niche or a new product that will meet some needs, and you strongly believe in it, but you don't even have the proof of concept, because proof of concept starts when you found your first customers. But sometimes you need even money to develop this idea, to develop whatever product you want to build. that's the time when usually you raise money from people with whom you have personal trust, like your friends, family. Maybe you know some people who are, I don't know, local businessmen who have already achieved something, and you can pitch to them. If they believe in you, they can give you money as well. There are also incubators, but I'm not sure like how widespread this practice of incubators is in Africa. It's also not extremely widespread in Europe, but also a caveat. So this is the stage at which normally you would be expected to give part of your business and raise money away and raise money with equity. However, there is an option, of course, if you have some personal assets, you can mortgage those assets in the bank. For instance, you own a house, you can go to the bank, take a personal loan against the security of your house. Your financing will be way cheaper, but of course the risk is that if you spend that loan building the product and that product doesn't take off for some reason, then you might be without the business and without the house eventually. So that's why, whereas there are some stories about people raising debt funding at this seed stage, it's really not advisable because it's extremely risky. Until you have your customers and until you have the proof of concept, it's way too risky to do debt financing at this stage. The next stage is called early stage, and it's when you have your minimal viable product, MVP in our fancy terms. When you are trying it out on your first users and customers, potentially you are getting first interest, first sales, you are learning from your customers in terms of feedback, how you need to twist and improve your product. So there is already something. That's where actually there are even like a lot of countries, they have special supporting programs for this early stage investment, equity investors, and people who will be giving you money will be able to offset them against in their tax returns and will be able to save taxes if the investment doesn't work out. Crowdfunding is also an option in this early stage because you have something to show people who will be investing or providing you with capital. However, again, at this stage, most common it's equity capital. It will be more expensive. You will have to give up share of your company. But like that's the way if you believe in your product and if you feel that you know what you're doing. Then comes the growth stage. The growth stage is when you have started generating relatively stable revenues. So sales are going, your product, your initial product the concept has been proven. You have built a business structure, you have built a business model. That's the time when your choice of how you finance your business becomes more broad, because that's when you potentially can get healthy business loans at quite low cost of capital, so relatively low interest, as opposed to selling yet another part of your company to venture capitalists or individual investors or corporate venture capitalists. So this is where the things are becoming more comfortable for you in terms of being able to access finance cheaper. But you have to get to that stage, obviously. You have to get to the stage where you are for several years producing revenue. And then usually at growth stage, people either need money to increase their inventory, which is called working capital funding. And that is something that you can definitely use the banking facility for, and it will be way cheaper to do so. Alternatively, of course, if you want to invest into new products, that is more risky, and that's where you might not want to risk any fixed repayments on monthly or annual basis, whichever way you agreed with your bank. That's in that case, for new products and new markets, more risky paths of growth, that's where it's also advisable to seek equity partners. Again, if it's a growth into a new market, it even makes sense to you to seek equity partner, because that person then will have vested interests in your success in that market. And if you'll find a local equity partner in the specific market into which you are venturing, that might prove not only beneficial from financing point of view, but also from access to the market, networking, and understanding of the market. Then, of course, we are moving to the next stage, which is when the business is very strong and you are entering big and new markets, potentially going to the next continent. You are maybe fighting to become one of the biggest players in the market. That's where you have really like a lot of choice. I am guessing that probably most of you watching this will be at the stage somewhere at between early stage and growth stage, which is also fine. This is probably the most interesting part of the business. I would like to also draw everyone's attention that this expansion stage, after which comes IPO stage, usually IPO stage is the stage when your initial early investors, they exit. You go public, you start trading your equity or you issue bonds on the stock exchanges, and that allows your either debtors or most often equity providers or equity partners exit if they wish to do so. For instance, for the venture capital team, for the private equity funds, they are always, if they are investing, that will always be with the view of doing an IPO and making the company public. That takes us to the next slide, in which I would like to, I have mentioned it already, but I would like to once more stress about the different investors suitable to different business stages. So on the very early stages, it's usually the people who are working on trust, your friends and family, crowdfunding angel investors, for the early stage and for the pre-seed or seed stage. Then, of course, when you are growing, you already will get some access to the venture capital. Furthermore, when you are established, private equity will be prepared to work with you. Strategic investors would be the corporate investors. So, for instance, as an example, in the UK, we have a seedlip company who have the gentleman who founded it. He has invented non-alcoholic drinks, and he was purchased by the Diageo company, a big conglomerate holding many different companies producing sundry alcoholic drinks, and they wanted to expand or manage a little bit risk of their portfolio at the time when, as we know, the young people don't drink as much as our older generations. And then they have purchased his company. Well, initially they have given him some funding, and then eventually they have agreed to buy it out. He wanted to venture to somewhere new. So this is the level of strategic investors. If you also very often, for instance, big international companies, when they go into local markets, they might not want to start building something from scratch. They will, I don't know, if you are a sewing business and they want to establish a sewing unit in your market and produce products locally, they might just buy out from you your sewing factory, and that's the way you will be able to raise money for the next venture. Or you will if you want to sell only half of the factory, then for the proceeds to increase your capacity of production, that will be also an option. Banks and lenders, as I was already saying, they are way cheaper than equity investors, obviously. But they will require also much stronger collateral. They will require proven track record, and they will be checking whether you are able to repay, and they will ask for very strong evidence of your ability to repay. Finally, It's probably more for long-term notice. Public investors, that's what your private equity and strategic investors potentially will be interested at. That's when you take your company public and list it on stock markets. That will be the exit for those private equity, venture capitalists, and potentially strategic investors. And again, of course, public raising money on the public market will be also slightly cheaper than, for instance, private equity. However, it will also cost a lot of effort in terms of meeting all of the regulatory requirements, which takes us to the next slide. Obviously, as you have understood already, depending on the type of the investor, every investor will be looking for something different in terms of risk and security. Equity investors will be prepared to take a lot of risk, to roll up their sleeves, to work together with you, to achieve whatever the goal of your business is, but they will also be taking full share of their profits. With debt investors, you will know how much they will take. It will usually be some percentage plus the capital that they gave you, but they will be they will only be checking if their security is still intact, but they will not be helping you to run your business. That's not their business model. They will have just a vague idea on what to expect from the company in your industry, but you will be on your own and you will have to be making steady repayments of the cash to the bank. In terms of what any lender will want is they will want to understand your business model clearly. They will want to see some proven traction, unless it's very early stage and people just know you personally and know that you are an honest person. They also will want to see that you have proper business processes and strong execution capacity, that you have a team around you, or you are building the team around you, which will enable you to deliver. And most of the equity investors will also want to see that there is a strong market interest in whatever you are offering, and that you will be able to scale. So if you have a product, you will be able to build the second version or another compatible product, or so that you will be able to, in a way, copy-paste your business model several times in either different markets or in different age categories or with different products, but there will be a strong expectation of being able to scale. And that takes us to the potentially final slide. So every pitch is not just as much about your inspiration for your business as it is also about clarity of what you are doing, your ability to explain what you are doing, your ability to back it all up with market numbers and financial numbers, and your ability also to project clearly how you are going to get to your goal and how you are going to approach this path towards your goal. So first of all, you really need to be extremely clear who your customers are and what you're solving for them. This is like, probably most of you have solved it already if you are at a certain level of having the business, but being also able to explain it clearly to the investor, that's a little bit of next level challenge. So having a product and intuitively knowing that it works is probably not enough. Being able to articulate it in a way that investor gets infected with your fire about your product, that is a separate challenge. Then, of course, you need to explain how, with this product that you are selling, you are making money. This is your business model. So like, what are your costs? What are your revenues? What are your funnels for the sales, etc. Strong market analysis, like that you can show that there is a big depth to your market, or that you will be able to open another market for your product, is also extremely important. It's really very critical, because you might have a great product, but if the market is limited, I'm not saying that it will not be able to raise the money for such companies, but the cost of such money might be so either cost in terms of equity, the equity investors will demand bigger share of the company to enable for them to have the return, or the banks will ask for more of the security if the market is not big enough on one hand. On another hand, sometimes also it can be that you are just not realizing how big your market is, because you have been working in a certain niche until now. And then us being able to have a glance from outside, we might be able to help to give you ideas of what investors would like to see in terms of how you present the market. Then obviously having a team is also extremely important, because investors invest in people. So having people who are able to execute your great business model and to go and make the deep market that you have aware of what you are selling is extremely important. And then obviously, if you are able to present your financial case in a better or more clear way and with more clarity, then you will be able to negotiate a better deal for you in terms of cost of the capital that you are getting. Which takes us to the next slide. And over to Alina to present the legal part of the whole process.
Thank you so much. Good morning, afternoon, or evening, wherever you are. It's really great to be here. And I'm really thankful to the organizers and to each of you who takes part in today's webinar. So speaking of the legal side of investments, we can say that definitely small and medium-sized enterprises are the heart of development and growth. However, investment process can be rather tricky. And we want to ensure that this process goes smoothly for you. Definitely, as business owners, you would want to retain control. You would want to retain the power. You would want to secure your guarantees of IP ownership and ensure that dispute resolution mechanisms are provided. So we would be happy to assist you in that process. And actually, we have elaborated a simple 7-step process of legal services that we provide to you. Thank you so much. So first of all, we shall have the initial consultation with you. As it has already been mentioned, we shall determine the goals of your business. We shall be able to talk about your priorities and in general evaluate the business that you have. During our second stage, it's actually investor readiness legal check. We'll be able to estimate the corporate house keeping you have. So it is very important to understand that you have all the processes duly performed, that you have no obligations that are not secured, and that all the IP ownership is secured as well, that you have all contracts in due way legally secured. During the following stage is the term sheet review. We shall help you understand the value of the business and help you to provide the due control mechanisms that are relevant for further stages. We shall also help you in drafting and negotiating investment agreements. This is really important to provide all the necessary provisions and ensure that you retain the control and the advantage is not taken from you. So we shall be able to help you with shareholder agreements, with subscription, option agreements, whatever applicable. During the due diligence support, we'll be able to help you with providing all the information that is requested from you by the investors. I will help you fill the data room with everything that is necessary and will make this process smooth and clear for you. All the information that is requested by the investors if it is requested on a legal basis, it must be provided transparently. And this transparency is the basis of your future due cooperation. Will we also be there for you for the closure of the deal? It's important to ensure that the closure is performed smoothly. We'll ensure all the signatures, the filings, the funds are correctly transferred. We'll be there with you. But we do not leave you at this stage as well. As it was previously mentioned, we have the post-investment protection. We'll be there for you. We don't leave you. And we provide all the ongoing advisory services for any governance, for any exit terms and compliance as well. So, as it has already been mentioned, it's actually really important to have all the legal documentation duly executed. You want to retain control. You want to secure your IP ownership. You want to ensure you have all the legal processes there in case something goes wrong. And I want to admit that due legal processes, it's not a luxury. It's actually a necessary and relevant stage of due investment attraction. So we would like to be your reliable partner. In case you have any questions, please feel free to contact us. Thank you so much.
Thank you very much. Wow, Alice and the APGB team, thank you so much for such an in-depth insight that you've given unto us. For anyone who wants to get into the investors, to access investors, anyone who wants to raise capital, anyone who wants to lead with confidence, I think today you have gotten more than enough tips to make sure that you are at least able to understand the procedure and the processes. We want to say a really, really huge thank you to each and every one of you for what you have done. And just to remind you that we are having, this is the Africa Women in Trade monthly webinar. We do hold webinars every month for our members. And this is to help you to grow from wherever stage you are. So just to remind you that our vision is to create a platform where we can connect you and give you, help you to, or enable you to trade. And whether you're at seed stage, if I got it right, and whether you're at the early stage or the growth stage, or your business is strong, there is something for you in this space. And we want to say a sincere thank you to the team for all that you have given us. And just to let you know that, if you're watching later, you can still get in touch with us at africawomenintrade.com. And also, we will also put our email, which is africawomenintrade@gmail.com. Okay, africawomenintrade@gmail.com, with more of your questions. And if you want to get in touch more, what we do is we encourage you to become a member, because this is mainly the webinars we do. We hold them mainly for our members, but today we stretched out to other people just to give you a taster of what you get when you're a member of Africa Women in Trade. It is the space to be, and I would encourage each and every one of you to go and join the membership. There is a jot form that is coming on the screen there where you can register, put your details. We'll be able to get in touch with you, and then we'll be able to also give you access and interact with you so that we know what exactly are you looking for. So as we said, Alice is one of our members, and she's one of our capacity builders also. So she has a lot to offer, and coming through Africa Women in Trade, there are many advantages, even as you access APGB for your next stage of your business. And I would like to say to those who are starting up, because not everybody's at the strong business stage, most people are in between. I would encourage you, come and join Africa Women in Trade. It's a place you can grow, and through that growth, you will be able to reach the stage where Alice and her team can then lead you to the next stage where you need to expand your business, because our aim is to see you grow from one level to another. And I want to say thank you. But there's a couple of questions that some people are asking, and they ask, who is eligible for this program of yours? Is it startups? Is it just people who are well established? And also, what is the minimum amount of money that investors are willing to work with, or what is the maximum? So how do people know, oh, I'm at that stage of my business whereby now I need to be able to come and see you and your team? Alice.
Thank you so much, MILKAH, and thank you for the question. Very important question. The program is designed for businesses that are in the market at least for the first 3 years. So you are like on your third full year in the market. So you already passed that test of your product in the market. You already start trading. That way we can help you with the structure and all the practical information that we share with you throughout the presentation, and we can help you with the next step. So that is the initial requirement for you to join our program.
All right, thank you very much. And there's another question here that says, what are the most common red flags that immediately lose investors' confidence?
I'll leave Lilia to answer that one.
Well, first thing that will lose investors' confidence is inability to explain what your business model is. Obviously, they really need to know that you know what you are doing. So you need to understand yourself in which way you are making money, what your sales funnels are. And then, of course, if the finances and the financial information is messed up and is not really clear and there are mistakes, then that will raise suspicion, obviously. So I think these are two very important things. Normally also the thing number one is your product / customer, but that you probably have that check you have passed if you have been for 3 years in the market. So at that point, after 3 years in the market, and you see that you can grow, then your ability to communicate to investors clearly how you're going to grow in terms of business model, how it will make money to the investors, and your ability also to support whatever you have done in the past 3 years with good, well-defined and clear financial statements will help you enormously.
Thank you very much. And we have another couple of questions. What makes a compelling story that resonates with the investors beyond just the numbers?
Well, numbers are, if you were looking at the presentation, numbers are number five in terms of lists in terms of points in the list. So numbers are important, of course, because investors are in it for money. But like your energy, your belief in the product, your team, your motivation, your understanding, again, like I can't repeat it enough, your understanding of your own business model and ability of marketing funnels and scalability is something that speaks to investors very strongly in the first place, and then in the second place they will be checking your financials.
Okay, and there's a question here on KPIs which says, what are the key metrics and KPIs, I think that's key performance indexes, that investors focus on for different stages and industries?
Well, that's a very broad question. I guess still it can be summarized in several bigger things. So like first thing is profit. So in terms of they will or they call it profit multiple. So I don't know, if they give you 100,000 and at the end, when they get their money back, they get 150,000. That is called multiple of capital, and it's 1.5 multiple of capital. So that's one. thing, then of course it's very important for them how quickly they can like for instance double their money, or make 1.5, or make a multiple of their money. Because if you return to them 1.5 in 1 year, it means 50% return on the investment. If you return it over 2 years, it's already only 25% on the investment. So there is another metrics which is called return on investment, or internal rate of return. It's percentual, and that's the second thing that people look at. And then of course at the absolute number, so generally profit. If you have a project for them for 1,000 and they can make only 50,000 of it on it, it's one thing. But if you have for them a project for million, let's say dollars, and they can make $1.5 million on it, it's a very different. You will be speaking to very different people. You will be getting very different amount of interest, and so I would say 3 main KPIs to start with. Of course, there are many more, but to start with, it will be profit, it will be a rate of return, and it will be the multiple of capital.
Thank you very much. And there's another question that says, can you give a good example of investments that you have done, and are there specific sectors that you are actually participating in right now?
Alice, probably over to you, because I can, of course, speak on my behalf, but you have done way more together with the APGB. So probably this one is over to you.
Yes. So we've done deals in construction, looking for projects in Africa. So I can't say too many details, but the projects are around $100 million in Angola and in Mozambique. Those are the markets that we have the most projects and the most interest from the UK. And also the recently that we have is a company that are based in Angola, and we are in the process with them for $6.5 million for their project in Angola. So those are the examples that I can give, either to find projects or connect investors.
Okay, so are you saying that you're mainly in the construction, or what other areas would you, because we have a big range of people who are watching. So
Yes.
like currently, what exactly, because you may have investors who are looking to invest in specific projects. So what do you have right now so that people who are watching can get in touch with Africa Women in Trade, so that we can connect them to you, you know, for the projects that they're needing funding or they're looking for investors currently. So
Yes.
you have investors, you're looking for the people to do the deal. So tell us.
We have a range. We have a range from agriculture sector. We have from textile, different industries. We also have our network of investors that are looking for those that are timeless, such as agriculture. So you always have new projects coming up, new developments, and also textile in Africa. But again, they are looking for a well-presented and projects that can communicate to how they can benefit and how they can partner with the businesses. So we have a range of either projects and also investors that are interested.
Thank you very much, Alice. We have a question here that says, we are a small company and looking for below $50,000 US.
Yes.
Is this something you can consider?
Yes, so we are being approached by smaller investors. We have investors from Nigeria, and they are in the diaspora. They are based here in the UK, and they are looking for small size tickets like 50,000, I think you said. So we do have a variety, and we do have investors that are looking to grow with small businesses. And that is something, and the reason why we create this funding program is because of the demand of investors looking for small businesses. And we identify that there is a lack of the structure, the communication. There is a gap between the communication that Lilia explained how important it is to have a pitch deck that can communicate clearly what you're looking for, and the investor can understand what you're selling, how you're gonna be able to make a profit out of your business.
Absolutely. Wow. I just want to say a really huge thank you. There was a question here. Let me just find it. Talking about, it asks, let me see it. How do you balance confidence with humility when presenting to investors?
I can take this one. Confidence is your clarity. Confidence is not about how loudly you speak. Actually, the fewer fancy words you use and are able to explain what you are doing and how you are making money, the more confident impression you will make. And actually, confidence, as opposed to arrogance, confidence is humility, because arrogance is trying to use fancy words, trying to impress investor, and it's not confidence. It's show of insecurity. If you're very clear what you're talking about, it will make you automatically not arrogant, so will convey your humility, but it will also make very clear that you know what you're talking about. You know how the investors will make money with your business, working together with you. And that's what will give you confidence. It's not about using fancy words. It's really about knowing what you are doing and where you are going.
I would add to that, MILKAH, if you allow me. When you have confidence, it's all about being open-minded, also to know that you are in the learning process. And if you don't know, you don't know. And you have the courage just to say, I haven't touched that side yet, but I'm working on it, or I will have to dig more into it. So having that open language that shows that you are in the process also to learn, and not to bring that wall that will say like, this is mine and I know what I'm doing, and use all the fancy words you can remember, and you're not listening. So that listening is also something that is important for you to bring to the table, because again, is the relationship human to human. So if you don't know, you don't know, and how you communicate that is not that you don't care, it's just that you are a human being and you don't have all the information. And that's why it's also important for you to have a team with different expertise that can feed you with the expertise that they have, and also you learn throughout the process.
Wow, thank you very much. I see a question here. Probably have partly answered it. Do you offer training on how to approach investors?
I think I'll leave Bridget to answer that.
I was going to say, I don't think we've approached that yet, but if there's a demand for it, we surely can put something together.
All right, there you are. So that is a possibility. Wow, thank you very much. There is so much we can talk. We are really past the 1 hour we had aimed for, because there's so much wealth and so much to learn. But listen, this is not the end of it. You can get in touch with us at Africa Women in Trade and gmail.com, and we'll be able to get in touch with you. We'll be able to connect you with APGB so that you can be able to go to the next level, and also to remind you that it is more advantageous for you to come via Africa Women in Trade, AfWITrade. Go on our website, africawomenintrade.com. You will find where it says about us at the very end. At bottom, you'll find how to become a member. Join our membership, fill in the JOT form, and we'll be able to connect you to Alice, and then you can take it up on a personal level, because that's how you will be able to grow. It is beautiful to attend the webinar and to get an overview of things, but if you want an in-depth of things, you need to connect. That's the only way that you'll be able to go deeper and be able to actually benefit from all these. I cannot thank you enough, Alice and your team. You have given us a wealth of knowledge. We really, really treasure you. We appreciate you. We have worked with them before with other partners, and I can tell you they are credible, they're honest, they're honest, and they have integrity. So I can tell you that from Africa Women in Trade, that they are good people to work with, and I would encourage each and every one of you, join us, come on board. This is a taster of what Africa Women in Trade have for you. There's so much more. This is just a little snippet. If you want to go deeper on other topics, you can connect with us either on LinkedIn, or you can get in touch with us on Facebook. You can join us. You can also join us on our website. We are looking forward to having more of you. And I want to say thank you very much. God bless you, ladies, and do have a wonderful, wonderful evening. Thank you to all our listeners. We appreciate you. Thank you for joining us. And also make sure you watch the recording again, because there will be much. There's a lot that's been said, and you need to go back and listen again. So don't forget AfricaWomenInTrade.com and AfricaWomenInTrade@gmail.com. Thank you, and God bless you. Have a lovely, lovely evening. Thank you.
Thank you so much. Thank you.
Bye.
Thank you.